Nature of Society Part 5, Session 4R. This week, as promised, we begin the topic of tax administration, and as usual, we begin with a quotation, and this from the well-known Henry George. He says, "Justice the object, taxation the means." A paradigm shift in tax determination. Running true to form, the United Nations and all its various agencies never seem to investigate the true causes of the phenomena they are trying to fix. And the lack of success in tax revenues is just another example of this failure. In this session, we will again look at the taxable capacity of land as being the best of the factors of production for such a purpose, and show how taxation here could be best determined with the least deleterious effect on the community. The economic definition of land is the entire material universe, less human beings and their produce. All natural materials and resources, the airwaves, the water, and the ground itself, all constitute land. Anything that nature freely supplies and not produced by man is properly categorized as land. It holds an unseen but pivotal and unique position in environmental, economic, and social theory. It is at the center of human institutions and culture, and not unimportantly, it supports all life. Human beings must use land always, and though it is freely supplied by nature, all men do not have free access to it. It is Providence's gift to man, and there is no cost to produce it. And herein lies its uniqueness. Its supply is fixed, and it is immobile, and to produce any good or service, it is essentially required directly or indirectly. It is the most basic platform and source of all wealth. Because ownership of land is an accepted facet of modern Western civilization, land rent, or price, is a demand made of landlords to tenants or prospective owners. Land rent is the amount demanded annually of tenants for exclusive use of sites of a specific location, size, or natural resource. It is essentially the returns that are possible to the land factor. Likewise, the returns to labor and capital are wages and interest, respectively. That landlords collect the rental or market values does not negate the fact that the value of land was created by the community through population growth, perception, and patronage. This is the main rationale for a site value tax. The current global view is that rental or market value of land occupies an insignificant or unimportant aspect of economic activity. But as we all know, land in city centers or suburbs can be extremely expensive and would force persons to go far away from these parts to less expensive areas. Land values are the preeminent force that determine the wealth or poverty of persons in a community. In many developed countries, land values could represent up to 45% of the gross annual product. Rental or market value of land is solely based on the demand for it. Because the supply is fixed, changes to its value will not create an increase or decrease in it. This is not the case with labor or capital. When there is a greater demand for products or services, more labor and capital will become available, and all prices will rise. Labor, capital, products, and services. Land values will also rise, but will not fall as rapidly as would be the case with labor and capital when demand for goods and services fall. This disparity in the rate of fall between land on the one hand and labor and capital on the other is the main reason for business recession and depression. Because land is the platform upon which all wealth is produced, it provides the most transparent, effective, efficient, accountable, and neutral medium upon which to assess the tax, communal due. And this tax would be based on the taxable capacity or market value of the site. This form of taxation is the only form that, when applied, has no negative effect on the productive potential of the occupier of the site, but would encourage its productive use. When a community captures tax in this way as public revenue, equity, the level playing field, is established here. In normal circumstances, land values captured as public revenue should be sufficient to meet all public expenditures, and there should be no need to impose taxes on income, wages, sales, ad valorem, buildings, machinery, or industry. There will be a transition period where some taxes will continue to be applied to labor, capital, goods, and services. But this need not be a long period if there is a strong commitment to SVT. Rental value, market value, and land tax. In this section, we will give a few definitions in the first instance to ensure clarity. The rental value of land is the annual amount demanded of tenants who wish to have exclusive use of it for a period. A land tax is a tax on a portion of rental value demanded and claimed by the community. The capitalization rate is a rate of return determined by the market that leads investors to invest in the utilization of land. This decision to invest takes into account the possible risks and benefits to be derived. The land market value is defined as the land rental value minus the land tax, divided by a capitalization rate, or land market value equals land rental value minus land tax, all divided by the capitalization rate. Land rental value is the market value multiplied by the capitalization rate plus land taxes. To bring context to these definitions, let us assume that a piece of residential land can fetch a rental value of $2,000. The land tax is $400. The capitalization rate is 6%. Then, land market value equals land rental value minus land taxes, all divided by the capitalization rate. So the land market value is equal to 2,000 minus 400, all divided by 6%, which gives a value of 26,666.67. Please note here that the land tax communal due is $400. The community only receives $400 of the market value that it has created. The rest of the market value stays in private hands. With commercial, industrial, or agricultural lands, or any type of land for that matter, the computation of market value is the same. This simple formula can be used to translate rental value into market value and vice versa. We can now look at the various ways that land values are estimated. Land value assessment. In the first instance, this is the domain of experts, but the assessor must determine land values that are comprehensible and supportable. He will make his assessment on several factors such as location, natural resource content, presence of public utilities and civil infrastructure, grading and natural drainage, aesthetics, air quality and sunshine. The process is essentially the valuation of rights to possess and or use land sites, and must consider other kinds of rights such as water, riparian rights, mineral rights, timber rights, grazing rights, hunting rights, fishing rights, air rights, and access rights. It utilizes basic economic principles as the foundation for valuations which we can now discuss. The first principle used in determining value is that of substitution. Simply put, the value of a piece of land will tend to be set by the price that a buyer would pay for a similarly desired substitute property if the length and cost of this transaction would be the same. The second principle is one of supply and demand. Simply, if demand for a site and supply remains fixed, the value of the site would increase. Similarly, if demand decreases, then the value of the site would also decrease. The third principle is one of anticipation. This principle states that the price of land can go up or down if an event is to take place in its proximity in the near future. Examples of such events include the construction and passage of a main thoroughfare near to the land, or the siting of a waste disposal facility near it would affect its value up or down respectively. The fourth principle upon which an assessment may be based is one of conformity. Conformity suggests that a piece of land will attain its maximum value if it conforms to the existing social and economic standards imposed on it by the community. Utility, scarcity, and desirability are the three ingredients that make land valuable. When a potential buyer is considering the purchase of a site at a particular location, these three considerations play uppermost in his mind. Lands that lack scarcity and utility will also lack value. Of these two, utility is the one characteristic that arouses desire for use, and scarcity confers the value on it. But these two in themselves are not enough. The potential users must have the ability to pay for there to be effective demand. When there is business recession or depression or collapse in the housing market, this is the unseen cause of these, the absence of effective demand. Let's stop here for a moment because you have had a lot to digest in this session thus far. What are your comments and questions? Limitations. For the prospective user to have use of the site, he must have tacit agreement with certain limitations placed on the usership. The first limitation is that he must subscribe to the payment of a land tax to provide revenue for public services, which is intended to defray the cost of services, benefits, and environmental protection provided by the government. In most instances, as previously mentioned, this tax is a portion of the market value of the site and well within the site's taxable capacity. The second limitation is that of eminent domain, where the government reserves the right to acquire, use, or hold the site for common public uses and benefits. The third limitation imposed is that of regulation. The government reserves the right to regulate the use of the site for the purposes of health, safety, general welfare, morals, building codes, zoning, sanitary regulations, and traffic regulations. These are all in furtherance of the welfare of the community. The fourth limitation is that of escheat. This is an ancient word meaning the right of reversion of ownership to the crown or state, should the tax obligations not be met. In the modern context, the government also reserves the right to have the site reverted to the state when taxes are unpaid or when there are no legal heirs. The best use of land. One of the significant benefits of a site value tax is the encouragement of the best use of land. A proper system of the assessment of its value is essential for this. The appropriate land value tax will cause the holder to employ the best economic use of the site to pay the tax. If he cannot do this, he will relinquish the site to another who can make the best economic use of it. The correct assessment of value can determine the highest and best use of each site. In such an SVT environment, the most efficient productive use of land will be the order of the day, and the most profitable use of land will ensue. This will be within the legal constraints of zoning, health, and other public restrictions. The land value assessment process. Later in this course, the land value assessment process is given in detail for persons who are so minded to find out. The process is a rigorous one, which demands the intervention of the general public to vet. Those landholders who are aggrieved of their land values should be given the opportunity to appeal the assessment. With the implementation of SVT, one can envisage more transactions as far as land acquisitions and disposals by citizens. There would need to be a robust system to accommodate many and various types of transactions, inclusive of payment of the SVT by the community members. There would have to be a land bank and exchange system, which we will now describe. The land bank and exchange system. Later in the course, there is a detailed description of how the SVT would operate in a community. And this is recommended reading for those who seeking a fuller appreciation of the subject. Because of the increased dynamism that SVT would spawn, there would need to be a community forum set up to facilitate these transactions. In the modern age, the Internet would facilitate this very effectively and efficiently. For those persons preferring human interaction, forum offices would be set up throughout the realm to allow for this. Landowners and prospective landowners will access these forums to sell and/or purchase sites. The land bank and exchange system will be a web-based system encompassing accurately all land and site holdings with their owners or holders. Utilizing the latest technology in digital mapping, the LBES will record all transactions in real time and must be up to date and foolproof. The LBES must give accurate information on the sites that are available, those which are occupied, those which are reserved by the state, and those which will be available at a future date. Maps that are accurate as regards location of any site, and 2- and 3-dimensional depictions of neighborhoods should be a capability of the software. Transactions which could be conducted through an app on one's smartphone, tablet, or desktop computer should be able to locate any landholding or site in the realm and complete an acquisition or disposal thereon. For those who are technologically challenged, a visit to the pertinent regional office would allow the opportunity for attendants to assist prospective customers in interacting with the same digital interface and complete their desired transactions. As stated before, the system must be impervious to fraud and manipulation, and must record and save transactions in real time because the service will be on a first-come, first-served basis. It must generate physical receipts for transactions and distribute to all parties concerned. One may ask, how would this new system affect the current system of land transactions, where ownership, title, and any encumbrances must be sorted out before any transfer is allowed? The answer is that this system will supersede the old conveyancing system, in that what would now become important is the payment of the site value tax. While the old system will not be abolished, the more important issue will be payment of the SVT to ensure occupancy. What SVT would bring about is much less disputes and litigation with land transactions. The mere availability of more sites for occupancy at lower prices, even at desirable locations, would allow prospectors to be much less disappointed if they can't acquire the desired location, as other desirable ones become available. Landowners would have the option of selling their lands to the LBES. They would only be paid when they are purchased, and they would not be able to regain the site under a stipulated time. If they do not dispose of the sites, they would be obligated to meet the SVT. Suspension of payment would only occur if they are granted planning permission to develop, but this would be for a stipulated period, and the foregone SVT would have to be repaid, prorated over time. No doubt that this innovation in tax administration would have a significant positive impact on the community. The LBES, designed to be very robust and tamper-proof, would be the central database for all lands, taxes, and national physical development matters. Because thousands of interactions and transactions are anticipated, the technology and software must have the ability to respond satisfactorily. Significant funding may be necessary, but the benefits would outweigh the expense. Certainly, the ability of the LBES to accept online payments of the SVT would be a great convenience for the taxpayer, as well as a great economy for the inland revenue in not having to provide staff and infrastructure for this purpose. So, to summarize the benefits to be had with the LBES, it would do the following. It would allow for the following. 1. Inclusion of all site and land holdings, both in and or out of use, and those sites that are underutilized. 2. Allow community members to identify and inquire into sites that are for sale, not in use, or underutilized. 3. Allow for the sale of sites to the LBES, the seller not being eligible for reacquisition for a specific time period. 4. Allow for the payment of the annual SVT dues in installments if necessary, and inquiry into arrears as well. With any land transfer transaction, the obligation to pay the SVT, including arrears, will be the only qualifying criteria. Gone would be the days when a land transfer must take a minimum of 90 days, as new site holders show their ability to meet the SVT, and they can then get on with the business of developing the sites. Much to chew on with all of this. What are your questions and comments? Site value taxation, the perceived cons. Over the years, there has been many perceived disadvantages listed about site value taxation, which would render the policy unimplementable. The most popular disadvantages are listed as follows. 1. The poor widow would have as much as her would pay as much as her wage-earning neighbors. 2. Rising land values would force people to move from certain areas. 3. SVT would lead to overdevelopment and loss of amenities. 4. Planners could increase site values artificially by rezoning. 5. It is unjust to tax in accordance with the site value because it is potential values that are being taxed. 6. It would be difficult to establish the value of many sites. 7. SVT would not raise sufficient revenue. 8. SVT would translate into higher rents and widespread price increases. These perceptions would each now be dealt with in turn. The poor widow objection could indeed be raised for many taxes now existing, such as taxes on pensions, value-added tax, sales tax, custom duties, etc. Many such persons or non-profit organizations occupy such valuable sites and would likewise require considerations. Those organizations include religious bodies, NGOs, and other charities. Treatment of the poor widow or pensioner can include either A, relocation of the widow or pensioner to an exclusive accommodation that is better than, or at least equal to, the existing, where the appropriate daycare, recreation, and living conditions are available for the incumbents. Or B, the families of these senior citizens can take over the management of these valuable sites and ensure that the tax is paid and the occupant satisfactorily cared for. C, deferment of the payment of the SVT until the occupant has passed on, with the accumulated taxes and interest be paid by the estate of the person or his heirs. Of the three, the first option is the most desirable because it could treat with a pressing social issue, which is the acceptable care of senior citizens. What do we think of this? Regarding the second disadvantage, which is rising land values, this could not be so dramatic as to commensurate SVT burdensome. Although residential lands morph into commercial lands over time, this would hardly inconvenience residents with burdensome taxes because SVT is a dynamic regime allowing residents to move to sites that meet their requirements, both aesthetically and economically. The increase in site values would benefit the community through the SVT, so the question of burdens would not arise. The third perceived disadvantage about the fear of overdevelopment and loss of amenities suggests that the community would be subjected to greater commercial construction, such as the proliferation of office blocks. This fear is unfounded because of the preeminence of planning regulations that would preclude this. These planning regulations would invariably align with site values and what could be realized, and these would be annually appraised. The fourth disadvantage listed is the view that planners could increase site values artificially by rezoning. This is erroneous because planners usually enter the picture after the fact. Zoning or rezoning usually occurs after the site begins to exhibit a latent value that is higher than the current listed value. What SVT would mitigate is the possibility of landowners benefiting from any increases in land value that rezoning may bring about. The fifth perceived disadvantage is that SVT would be applied in relation to potential values rather than actual site values. The main premise of SVT is that it is applying taxes in accordance with taxable capacity or values that could be realized. For instance, zoning restrictions which prescribe agriculture, industrial activity, commercial activity, residential and recreational activity will only be taxed in accordance with these usages and not otherwise. Activities that are out of sync with the zoning permissions will be taxed at the higher valued rate to encourage users to locate themselves in the permitted zones. As the zoning exercise will now be an annual one, development and redevelopment will not be stymied as public policy keeps in step with the development desires of the community. Let's stop here now for today, and we have been given a lot to chew on and digest. What do we make of all of this, though? Next week, we will continue our discussion on this new subject, tax administration. Before we end, I would like again to let you attendees know that Unsustainable Development is an educational offering devoted to the dissemination of its course to all of mankind and to those who have the English language as their official language in the first instance, and to all eventually all over the world. We have in fact been sending this course all over the English-speaking world with very favorable responses. To continue to make this possible, and because we do not charge a fee for this dissemination, we rely wholeheartedly on monetary donations to meet the cost of achieving these goals. If you have found these sessions useful thus far and would like others to have access to them, we would gratefully accept your donations should you be inclined to offer them. You can send donations to our PayPal account at the email address nigelgittins@gmail.com. Thank you for your kind gesture.